Hey everyone, welcome back to Corporate Decoded, the place where we decode the complex world of corporate finance with simple language. In this video, we're going to dive into a massive SEC filing from BlackRock ETF Trust THUG. It is a certified shareholder report, and folks, let me tell you, it is packed with numbers everywhere, and we're going to try and make sense of what they actually mean for investors. This report covers several eShares ETFs that BlackRock manages. We've got the eShares OOO Active ETF, the eShares BBB CLO Active ETF, the eShares Flexible Income Active ETF, the eShares Floating Rate Loan Active ETF, the eShares Intermediate Muni Income Active ETF, the eShares Short-Term California Muni Active ETF, the eShares Short Duration High Yield Muni Active ETF, and the eShares Total Return Active ETF. That is a mouthful, but the core of it is BlackRock is investing a ton of money in these funds, and we need to see how they're performing. Let's start with the eShares AAA CLO Active ETF. For the year ending the 31st of July 2025, this fund returned 6.09%, not too shabby. The benchmark index, the Bloomberg US Universal Index, returned 4.00% during the same period, so the fund did outperform its benchmark, which is a good sign. The report mentions that portfolio yield was a big contributor, thanks to the secured overnight financing rate holding steady. Price appreciation from discount margins also contributed positively, and even though there was some volatility in April of 2025, the fund saw a modest contribution from price appreciation. Now for the numbers, this fund has over $1 billion in net assets. That is a huge amount of money. The number of portfolio holdings is 316, which suggests a pretty diversified approach within its specific investing strategy. Total investment advisory fees came in at $1,356,604. Now that sounds like a lot, but keep in mind it is for managing over $1 billion. The portfolio turnover rate is 89%, which is quite high. This means they rebuying and selling securities pretty frequently, which can lead to higher trading costs. Next up is the eShares BBB CLO Active ETF. This one is much younger. It only began operations in January of 2025, so we're re-looking at a shorter reporting period ending the 31st of July 2025. During this period, the fund returned 2.84%. Again, it outperformed its benchmark, the Bloomberg US Universal Index, which returned 3.32%. The report highlights that portfolio yield was the main driver of returns, benefiting from steady short-term policy rates from the US Federal Reserve. This fund has significantly less in net assets, around $65 million. It holds 41 portfolio positions, which is much less concentrated than the AAA CLO fund. The net investment advisory fees are $134,857 for this period. The portfolio turnover rate is 30%, much lower than the AAA fund, suggesting a more buy and hold strategy for this ETF. Moving on to the eShares Flexible Income Active ETF. This fund returned 6.50% for the year ending the 31st of July 2025, outperforming the Bloomberg US Universal Index, as 4.00% return. According to the report, positive contributions came from exposures to US high-yield and European high-yield corporate bonds. They also gained from securitized assets, including commercial mortgage-backed securities, collateralized loan obligations, and asset-backed securities. This fund is massive with over $10 billion in net assets. It holds a whopping 3,774 portfolio positions, indicating a very broad diversification. The net investment advisory fees are about $28 million. A high portfolio turnover rate of 291% suggests active management and frequent trading, which is something to keep an eye on for potential costs. For the eShares Floating Rate Loan Active ETF, they reported a return of 7.04% for the year ending the 31st of July 2025. This fund is primarily invested in bank loans, which performed well over the period. The report singles out technology, diversified manufacturing, and property and casualty insurance sectors as performing particularly well. This fund has about $60 million in net assets and holds 448 portfolio positions. The net investment advisory fees are around $307,665. A portfolio turnover rate of 38% is moderate, suggesting a balance between adjusting the portfolio and holding positions. Now let's look at the muni income funds. The eShares Intermediate Muni Income Active ETF returned 2.01% for the year, while the Bloomberg Municipal Bond Index returned 0.00%. That is a significant outperformance. The report states that income, which offset falling prices and widening yield spreads, was the key contributor. Transportation and corporate-backed issues were the largest sector contributors. This fund manages over $116 million in net assets with 216 portfolio holdings. The net investment advisory fees are about $151,879. A portfolio turnover rate of 66% indicates a moderate level of trading. The iShares Short Duration High Yield Muni Active ETF returned 0.86% for the year. The report attributes positive contributions to income which offset falling prices and widening yield spreads. Sector-wise, short-term development district issues and prepaid gas bonds were standout performers. This fund is quite large with over $366 million in net assets and 321 portfolio holdings. The net investment advisory fees are close to $900,000. The portfolio turnover rate is 50%, which is moderate. The iShares Short Term California Muni Active ETF returned 3.26% for the year. The report mentions that holdings in longer dated securities up to 5 years in sectors like corporate prepaid gas and transportation contributed to performance. Variable rate demand notes and tender option floaters were also core holdings, offering attractive yields and price stability. This fund has about $131 million in net assets and 138 portfolio holdings. The net investment advisory fees are around $125,000. A portfolio turnover rate of 113% is relatively high, suggesting active management with frequent adjustments to the holdings. Finally, the iShares Total Return Active ETF returned 3.59% for the year, slightly outperforming the Bloomberg US Aggregate Bond Index, S3.38% return. The report attributes positive contributions to securitized assets, including commercial mortgage-backed securities, non-agency mortgage-backed securities, collateralized loan obligations, and asset-backed securities. This is another large fund with over $257 million in net assets. It holds 1,681 portfolio positions, which is a very high number and indicates a highly diversified strategy. The net investment advisory fees are about $594,314. The portfolio turnover rate is a very high 6.47%, suggesting very active management and frequent trading. Now let us briefly touch on the auditors. The filing mentions fees billed by PricewaterhouseCoopers LLP-WC in each of the last 2 fiscal years. For the iShares OOO Active ETF, audit fees were $13,989 for the current fiscal year. This number is consistent for several other funds as well. For the iShares BBB BCLO Active ETF, the audit fees were $12,625. An interesting bit of disclosure comes with the Audit Committee Financial Expert. The filing names Lorenzo A. Flores, Catherine A., Lynch and Arthur P. Steinmetz as serving on the Audit Committee and being independent. It is good to see these oversight roles are clearly defined. When we look at these financials broadly, BlackRock's iShares funds show a mixed bag. Some like the OOO Active ETF and the Intermediate Muni Income Active ETF are outperforming their benchmarks and have healthy asset bases. Others like the Total Return Active ETF have very high turnover rates and a vast number of holdings, which while diversified also means quite a bit of trading activity. The muni funds also seem to be finding their footing with solid returns outperforming their benchmarks. It is crucial to remember that past performance is not a guarantee of future results, and share prices will fluctuate. As always, do your own research before investing. That is our breakdown of this BlackRock filing. What are your thoughts on these iShares ETFs? Let us know in the comments. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives into the financial world. And don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.